Starbucks stock, ticker symbol SBUX. Is Starbucks a dividend growth stock to buy? Well, Starbucks is down a lot year to date, around 32%. And to be honest, I do think this stock went from an overvalued dividend stock in the beginning of this year to an undervalued dividend growth stock. So, is this the perfect time to buy Starbucks stock? In this video I'm going to show real quickly what Starbucks does, a view at the historical returns, the fundamental analysis, dividends, the major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So what does Starbucks do? Today, with more than 34,000 stores in 80 countries, Starbucks is the premium roaster and retailer of specialty coffee in the world. And with every cup, they strive to bring both heritage and exceptional experience to life. So it's not only about serving coffee, but also giving an experience. If we check the revenue breakdown in the latest quarterly report, we see that there are three revenue streams. Company-operated stores, which is by far the biggest segment, representing around 82% of the total revenue. Year over year, this segment is up 11%. Licensed stores represents around 11% of the total revenue and is up 42.8% year over year, which is also quite a lot. And the third segment is other, representing around 6.7% of the total revenue, and this segment is up 21.3% year over year. When we check the revenue breakdown by geolocation, we see that North America is by far the biggest with 71% revenue share, while international only has 29% revenue share. This means a lot of growth potential outside the US. Company-operated stores represent 90% in the US revenue. Licensed stores represent 9.3% revenue, and other is representing around 0.1%, which is quite different compared to international, where company-owned stores is representing 78% of the revenue and licensed stores 20%. Other represents 1.1%. For Starbucks, there are two ways to increase revenue: open a new store or grow the comparable store sales. First, let's check the opening of new stores. Bottom line, an increase of almost 33,000 stores to 34,600 stores, which is an increase around 5% year over year. Most stores were opened international, which is also quite logical, since the US is having already a lot of stores. And this is confirmed in this graph. Store count in the US grew by only 2%, but comparable store sales grew by 12%, versus last year 9%. We can break down comparable store sales into change in transactions and change in tickets. Transactions is up 5% and ticket is up 7%. Seems very good to me. But in this graph we see that China, a big chunk of the international revenue, is not performing that great and is having a lot of trouble with the lockdowns. Comparable store sales is down 23%, transactions is down 20%, and ticket is also down 4%. But the store count has increased 14%, which is quite nice. And now that we know more about the company Starbucks, it's time to check the historical returns and compare it to the S&P 500 and some other companies. I decided to include the S&P 500 as a benchmark, Chipotle ticker symbol CMG, Yum Brands ticker symbol YUM, and Restaurant Brands International ticker symbol QSR. On the 5-year chart we see that Starbucks underperformed the S&P 500, but it has to be said that this only happened because the big drop beginning 2022 for Starbucks. The 4-year before this period, Starbucks beat the S&P 500 in most cases, so that's quite interesting. Chipotle easily beaten the S&P 500 in the past 5 years, and Yum Brands is around the same return as the S&P 500, but QSR is down almost 2%. On the 1-year chart we see that Starbucks is down almost 31%, while the S&P 500 is down only 9%. Chipotle is down 14%, Yum Brands nearly flat, and QSR is down almost 17%. And it's the same story on the 6-month chart, where Starbucks is down 25%, the S&P is down almost 16%, Chipotle down 15%, Yum Brands down 12%, and QSR is down the least with only 9%. On the 1-month chart it seems to recover just a little bit, where Starbucks is nearly flat, but the S&P 500 is still down 6%. All other stocks are also nearly flat as well. So is this the perfect time to buy Starbucks stock? Let's find out by checking the fundamentals of this company. Starbucks is a 90 billion market cap company with a 12 trailing month revenue of 31 billion. And in this graph we see that revenue went up quite nice and steady in the past decade. Of course, there's a big decline in revenue in 2020, which is related to the Roni virus. After that, it picked up the same pace as before the pandemic, so this comforts me a lot, looks really nice and steady. Net income is at 4.4 billion, which gives us a profit margin of 14%, which is above the 5-year profit margin of 12.4%, so this looks quite good as profit margins are increasing. PE ratio is at 20, which could indicate that Starbucks is around its fair value based on the PE ratio. Return on assets sits at almost 14% and is above the minimum of 10%. Return on equity doesn't look very good, so keep an eye on that number. Return on invested capital looks good at 17%, but keep in mind that this is lower than the 5-year average. Next up is the balance sheet and cash flow statement. Starbucks has a total cash of 4 billion. Operating cash flow is at 5.3 billion and leverage-free cash flow is at 3 billion. With debt sitting at almost 25 billion, they don't have enough cash to pay down a big chunk of their total debt. So this is something I don't like about Starbucks. They have too much debt compared to the cash position. So it's very important for me that free cash flow is growing. And in this graph we see that in the long run it's growing, but it's not always consistent. The most recent drop in 2020 is of course related to the Roni virus. The good thing is that right now cash is growing again. But keep an eye on this number because you want to have a really nice and steady growth pattern here, instead of up and down a lot. Free cash flow is used to pay down debt of course, but also to buy back shares and pay dividends. Next to that, they can use it to open new stores or to redesign or improve current stores. Starbucks bought back a lot of shares in the past 5 years, around 20%, which added a lot of value to the investor. But since the new CEO and former founder of Starbucks announced that share buyback is on hold, I don't think we will see much share buyback in the coming quarter, since they are going to invest the money into other parts of the business, such as improving the staff quality. So to be honest, I do like the fact they are going to invest in their own people, since this will add value in the long run. But I don't like the fact that share buybacks will be on hold for now, so keep an eye on this number as well. Because when they buy back shares, it's more easy to maintain and support the dividend, since less dividends are paid. And this is also very important for a lot of Starbucks investors. Starbucks pays a 2.5% dividend yield, which is pretty decent. Annual payout is at $1.96 a share or 49 cents a quarter. Payout ratio is at 57%, which is a little bit too high in my opinion, but nothing to worry about for now. You want this number to be below 50%, so it's almost there. And since free cash flow is growing again, I think they will do fine. The 5-year growth rate is at 15%, which is pretty high, and combined with a dividend yield of already 2.5%, I think Starbucks could be a dividend growth stock. They grew the dividends for 12 years in a row. Next up are the fundamentals of Starbucks versus some competitors. Since I think Starbucks has a big moat in terms of serving coffee, I decided to include similar companies but with no focus on selling coffee as a core product. So again, we have Chipotle, ticker symbol CMG, Yum Brands, ticker symbol Yum, and Restaurant Brands International, ticker symbol QSR. Starbucks is by far the biggest companies in terms of market cap. When checking the valuation, we see that all companies have a higher PE ratio, except for QSR. As earlier told in this video, Starbucks is trading around its fair value based on the PE ratio. Starbucks has the highest revenue growth year over year, but Chipotle has the highest 3 and 5 year revenue compound annual growth rate. Starbucks is on the second spot doing quite alright with 7%. Net income is growing the fastest at Chipotle again. And Starbucks is again on the second spot. Margins are increasing for both companies. Net income margin is the highest at Yum Brands, but Starbucks is again in the second spot. Return on asset is the highest at Yum Brands, and you can guess it, Starbucks is on the second spot. Return on total capital is the same story. Yum Brands has the highest and Starbucks is again in the second highest. Next up is the balance sheet. All companies have a lot of debt compared to the cash position, and this is also because of the lockdown period. So it doesn't really worry me that much, but you want to keep an eye on this number. Last thing I want to compare are the dividends. QSR has the highest dividend yield with 4.2% and Starbucks has the second highest dividend yield. Payout ratio is the lowest at Yum Brands and Starbucks has the second lowest payout ratio. Starbucks also has the second highest dividend growth rate and the second highest consecutive years of dividend growth. So overall, I think Starbucks did real fine. They have a few fundamentals that are way better than some similar companies, and they have a lot of second spots in there. But there's no company in this list significantly doing better on all spots than Starbucks. Last part of this video will be about the 3 price targets that I made for Starbucks. I'm using the Everything Money software to come up with 3 price targets based on my assumptions. Please check out this Everything Money software, it's one of the best tools that I know. And this is not sponsored or anything, but just my honest opinion. Right now, Starbucks is at $78. And with my 3 assumptions, we see that we have a low price target of around $60 to $65. But with my mid and high assumptions, we are seeing green numbers from $84 to $120, which is quite a big range. And to be honest, I think it will be slightly above the mid assumption. There's a lot of growth outside the US, so that's why I think the mid assumption is justified. Next to that, US is still growing in steady numbers every year in terms of comparable sales growth. My final conclusion on Starbucks is that it's a great company. Fundamentals are really steady and decent, and at current prices I think it's a buy. But there are also some negative things about this stock, such as the total amount of debt, the buyback which is on hold, and of course some issues with the current lockdowns in China. But overall, I think Starbucks will do fine in the future, since there's a lot of growth potential still outside the US. Starbucks is already one of the bigger positions in my portfolio, and I will slowly increase them along the way, since I think at current prices you get a pretty decent deal. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.